General Motors out with earnings this morning with EPS revenues ahead of estimates. This comes as White House officials say the Trump administration is going to be moving to reduce the impact of auto tariffs by lightening some levies placed on foreign parts in U.S. manufactured cars. Joining us right now to talk about it, Mark Fields, former Ford Motor Company president and CEO and a CNBC contributor. Tell us what kind of sigh of relief may or may not be taking place in Detroit this morning, Mark.
Well, I think, Andrew, the OEMs get a partial win, but at least what was reported, these tariffs are going to alleviate some of the duties on some of the imported parts, and also for keeping tariffs on cars that are imported into the U.S. Different tariffs stacking on top of each other. So I guess the net of it is it's a pullback on the margins. As I said, the OEMs get a partial win, but it's not a wholesale elimination of the tariff. And I'm sure, Andrew, there was some kind of quid pro quo with the Trump administration in terms of the OEMs either committing to moving some production back to the U.S. or also alternatively advocating very strongly in their supply base to move some of the parts manufacturing, particularly for those less labor-intensive parts, to come back to the U.S. So a bit of a sigh of relief, but, the bottom line is those tariffs are still there. It's going to increase the automakers' costs. And they're going to have to make a decision on how much do they pass on to consumers versus how much do they eat themselves.
Of course, the president has promised to try to bring manufacturing back to the U.S. When you say that the OEMs may have promised to bring things back or to push on suppliers to do the same kind of thing, how quickly do you think that happens, and what does that do to the cost base?
Well, in some cases, it could be quicker than others. Let's use GM as an example. They produce full-size pickups down in Mexico, and they have a plant, I believe, in Indiana, and they've said they're going to pull in about 100,000 units of the 400,000 units they make down there to Indiana. So that can happen relatively quickly. But in other cases, when you're looking at products that are made outside the U.S., and let's say you have some capacity, open capacity here in the U.S., it's going to take, at least, 18 to 24 months at least to refacilitize those plants to allow that particular product to come back into the market, particularly if it's on what they call a different platform. And then secondly, if you're looking to build a plant, let's use an example. Hyundai Kia imports about 65% of their vehicles from outside the U.S. And with this 25% tariff from vehicles coming from Korea, they'll build a plant, and they're just bringing online, for example, a plant that they started back in 2019, 2020. So you're looking 5 years there. But it's going to be a combination of, short timelines, but also some medium to long timelines. And
then there's two related questions. What kind of jobs does that mean? Do you think that we're going to be seeing in the U.S.? Are most of those factories humans? Are those robots? What does that actually look like? And then what does it do to the cost base?
Yeah, well, first off, on the cost base is going to go up, right? Because, when you're using, labor costs that are much less in other parts of the world, that's going to increase your cost base. But in terms of the labor, this is what's most interesting, Andrew, and it's a great question. A lot of times in the automakers, we used to look at the labor content, and we used to say, how much of that could we automate? And we'd look at the cost of what it would, the capital expenditure cost to actually automate and buy the machinery versus just making the production overseas in lower labor cost areas. So I think what the automakers are doing right now, first off, they're deciphering, what do these changes mean? And, they'll come out a little later today. So they have to understand the reality. Then they're putting these, probably big analytic groups in their purchasing areas and deciding, looking at their parts footprint and their suppliers and saying what parts are best for automating, so that if we have to bring these kind of parts back, we can spend the capital expenditures, automate, reduce the amount of labor, and that's a more compelling business case than it was, let's just say, last year.
So it doesn't lead to more jobs?
That's the question. Yeah.
Well, incrementally, yes, it will lead to more jobs, but it's not going to be a one-for-one. I think the automakers are going to look very closely on moving very fast to automate as much of the processes as possible. But the bottom line is, yes, it will add jobs back here in the U.S. It will add investment because the automakers are going to be investing in capital equipment. But it's not going to be a one-for-one trade-off between what's employment overseas versus employment here in the
Hey,
U.S.
Mark, real quick, we got General Motors, Ford, Stellantis on the screen. We probably should have Tesla on that screen as well. Who do you think is the winner of this little situation right now? Is there a winner and a loser?
Well, nobody's a winner in this, Andrew, for the very fact, as we talked about earlier, the costs for the automakers are going up, and it could be costs for consumers going up. But relatively speaking, particularly if some of these changes that were reported by the Wall Street Journal last night on auto parts come through, I think the biggest winner is Tesla, because they have all of their production here in the U.S. They're getting a lot of parts from overseas, but if these changes take into effect, they'll be a winner. I think Ford also, they are also producing 80% or assembling 80% of their vehicles here in the U.S. I think GM and Stellantis are going to be more challenged. Stellantis imports probably over 50% of their vehicles into the U.S. GM about the same number. And importantly, GM and Stellantis produce a number of their full-size pickups, which are big profit makers, in some cases outside the U.S. So that's going to hurt them more than, let's say, GM. Or more
and then
than Ford.
finally, I got a sort of techie question for you, because there's been a little bit of debate about it. We heard from Google last week. They talked a lot about Waymo and that earnings report. The first time they talked about Waymo. Tesla starting its robotaxi program in 2 months in Austin. Of course, Elon Musk has also talked about really having a massive robotaxi program where people are going to be effectively using their cars as robotaxis and sort of selling them or leasing them into fleets and things like that. How far do you think Tesla is in that game versus where Waymo is, and what does that look like to you long term?
Well, when you look at Waymo versus Tesla, just look at permits and the ability to operate. I mean, Waymo is way ahead of Tesla in terms of getting the permits to operate their vehicles. I mean, when I go to San Francisco, I take Waymos all the time. They're already in the market there. They're in a couple other markets. Tesla still needs to get the permits from, in this case, in California, from the California authorities. I think, secondly, listen, Waymo has proven over the years, they're in 5 or 6 different cities now. Tesla has talked a lot about this. But again, they're using a different technology. They're using cameras versus LiDAR, which is Waymo is using. And so I think technologically speaking, it's still a big question mark how these Tesla vehicles are actually going to perform in some of these cities with a different technology, albeit, they've mapped a lot of those cities because they have a lot of cars out there. So
when do you think we know?
I think that's the big question.
When do you think we'll know whether Tesla's without LiDAR, whether Tesla cars can fully do it? I mean, do you think that this Austin experiment will prove the point or not, and you'll know after a month or two?
Yeah, I think you're going to know relatively soon, because in each of those states, you're going to have to report incidents. And, if you have Tesla that's launching in June in, let's say, Austin, you're going to know in a couple of months, are their incidence rates higher than Waymo's? So I think you're going to know pretty quickly how they perform.